Hello and welcome back. Today we are setting sail with Mazagon Dock Shipbuilders Limited, or MDL. They're a big name in India's defense sector, a Navratna company, right? And they've been around for ages, celebrating 250 years, which is quite a milestone.
That's right. MDL is India's leading public sector shipyard, primarily constructing warships and submarines for the Indian Navy and Coast Guard, and also involved in ship repairs. They're headquartered in Mumbai. It's a company with a very rich history and a critical role in national security.
Indeed. So, they've recently announced their audited financial results for the fourth quarter and the full financial year ended March 31st, 2025. The Board of Directors approved these results on May 29th, 2025. We'll be looking at both their standalone and consolidated figures. Let's dive straight into the key financials. How did MDL perform in terms of revenue from operations for the fourth quarter?
Okay, starting with the consolidated numbers for the fourth quarter of FY25. That's the quarter ended March 31st, 2025. Revenue from operations stood at approximately 3,174.41 crore rupees. Comparing this year over year, it's a slight increase from the 3,103.65 crore rupees they reported in the fourth quarter of FY24. Now looking at it quarter over quarter, compared to the 3,143.62 crore rupees in the third quarter of FY25, it's also a marginal increase, so fairly stable on the revenue front for the quarter.
And what about the standalone revenue for Q4? Is it a similar picture?
Yes, for MDL, the standalone revenue from operations is identical to the consolidated figures for these periods. So for Q4 FY25, standalone revenue was also 3,174.41 crore rupees. The year-over-year and quarter-over-quarter comparisons would be the same as consolidated, a slight increase both ways.
Got it. Now let's talk about profitability. What are the EBITDA figures looking like for Q4, both consolidated and standalone? I believe the investor presentation had some numbers on this.
That's right. According to their investor presentation, for consolidated Q4 FY25, the EBITDA was 370 crore rupees. Year over year, this is down from 873 crore rupees in Q4 FY24. That's quite a drop. And quarter over quarter, it's also a significant decrease from 1,104 crore rupees in Q3 FY25. For the standalone Q4 FY25, EBITDA was 436 crore rupees. Year over year, this is also down from 900 crore rupees in Q4 FY24. And quarter over quarter, again a substantial drop from 1,104 crore rupees in Q3 FY25. So Q4 EBITDA shows a considerable decline both year over year and, more sharply, quarter over quarter for both standalone and consolidated results.
That sharp quarter-over-quarter drop in EBITDA is definitely noteworthy, even if revenue held steady. Let's look at profit before tax, or PBT, for the fourth quarter.
For consolidated PBT in Q4 FY25, it was 369.81 crore rupees. Year over year, this is down from 848.64 crore rupees in Q4 FY24. Quarter over quarter, it's a significant fall from 1,062.57 crore rupees in Q3 FY25. For standalone PBT in Q4 FY25, the figure is 406.36 crore rupees. Year over year, this is lower than the 876.12 crore rupees in Q4 FY24. And quarter over quarter, again, a steep decline from 1,062.57 crore rupees in Q3 FY25. So similar to EBITDA, PBT also saw a sharp sequential dip in Q4.
And carrying this through to profit after tax, or PAT?
On a consolidated basis, PAT for Q4 FY25, after share of profit from its associate, was 325.29 crore rupees. Year over year, this is down from 662.97 crore rupees in Q4 FY24. Quarter over quarter, it's a sharp drop from 807.04 crore rupees in Q3 FY25. On a standalone basis, PAT for Q4 FY25 stood at 326.97 crore rupees. Year over year, this is down from 654.33 crore rupees in Q4 FY24. And quarter over quarter, it fell significantly from 768.22 crore rupees in Q3 FY25. So the trend of a weaker Q4 compared to Q3 and also compared to the previous year's Q4 continues for PAT.
What does this translate to in terms of earnings per share or EPS for the quarter?
The consolidated basic EPS for Q4 FY25 was 8.06 rupees on a face value of 5 rupees per share. Year over year, this is down from 16.44 rupees in Q4 FY24. Quarter over quarter, it's down from 20.01 rupees in Q3 FY25. The standalone basic EPS for Q4 FY25 was 8.11 rupees. Year over year, this is down from 16.22 rupees in Q4 FY24. And quarter over quarter, it's down from 19.04 rupees in Q3 FY25. So, EPS reflects the lower profitability in the fourth quarter.
That's a clear picture for the quarter. Now, how did MDL fare for the full financial year FY25 compared to FY24? Let's start with full year revenue.
For the full financial year FY25, consolidated revenue from operations was impressive at 11,431.88 crore rupees. This is a strong year-over-year growth from 9,466.58 crore rupees in FY24. The standalone revenue for FY25 is the same, 11,431.88 crore rupees, also showing that strong year-over-year growth from 9,466.58 crore rupees.
That's a healthy jump in annual revenue. What about the full year EBITDA?
For the full year FY25, consolidated EBITDA, as per the investor presentation, was 3,181 crore rupees. This is a solid increase year over year from 2,513 crore rupees in FY24. Standalone EBITDA for FY25 was 3,229 crore rupees, up significantly year over year from 2,550 crore rupees in FY24.
Excellent. And full year profit before and after tax?
For the full year FY25, consolidated PBT stood at 3,061.66 crore rupees, up year over year from 2,424.83 crore rupees in FY24. The consolidated PAT for FY25 was 2,413.51 crore rupees, a good increase year over year from 1,936.97 crore rupees in FY24. On the standalone side for FY25, PBT was 3,109.20 crore rupees, up year over year from 2,461.38 crore rupees. And standalone PAT for FY25 was 2,324.88 crore rupees, up year over year from 1,845.43 crore rupees. So, the full year picture is quite robust despite the weaker Q4.
And the full year EPS?
The consolidated basic EPS for FY25 was 59.83 rupees, up from 48.02 rupees in FY24. The standalone basic EPS for FY25 was 57.63 rupees, up from 45.75 rupees in FY24.
Was there any significant other income that influenced these numbers, either quarterly or annually?
Yes, other income did play a part. For consolidated Q4 FY25, it was 30.95 crore rupees compared to 34.87 crore rupees in Q4 FY24 and 28.64 crore in Q3 FY25. For the full year FY25, consolidated other income was 112.12 crore rupees, slightly up from 110.15 crore rupees in FY24. For standalone Q4 FY25, other income was 34.61 crore rupees compared to 37.62 crore rupees in Q4 FY24 and 28.64 crore in Q3 FY25. For the full year FY25, standalone other income was 116.88 crore rupees, up from 113.80 crore rupees in FY24. So, it's a consistent contributor, but not the primary driver of the profit changes we've seen.
Let's shift to profitability insights. What can we say about margins, especially with the EBITDA figures available from the presentation?
For the full year FY25, the standalone EBITDA margin comes out to about 28.2%. That's 3,229 crore rupees EBITDA over 11,432 crore rupees. And the consolidated EBITDA margin is around 27.8%. These are very healthy margins for the full year. However, for Q4 FY25, the standalone EBITDA margin was about 13.7% and consolidated was around 11.6%. This reflects that significant quarter-over-quarter drop in EBITDA we discussed earlier, pulling down the quarterly margins considerably. The investor presentation also mentions an operating margin of 17% for FY24 for both standalone and consolidated, up from 14% in FY24, though their calculation basis for this specific operating margin isn't detailed. It likely refers to PBT or a similar metric over revenue.
Were there any exceptional items reported that we should be aware of?
Looking at both the standalone and consolidated profit and loss statements, there are no line items for exceptional items for the current quarter or year. This suggests the results are cleaner in that regard, reflecting ordinary operational performance.
How does the balance sheet look? Any key takeaways from there?
On the consolidated balance sheet as of March 31, 2025, total equity stands at 7,939.88 crore rupees, up from 6,243.47 crore rupees a year ago. Total assets are 28,707.72 crore rupees. On the standalone balance sheet, total equity is 7,180.84 crore rupees, up from 5,570.68 crore rupees. Total assets are 27,948.68 crore rupees. The company continues to have a strong equity base. Detailed debt figures aren't immediately broken out in a summary, but traditionally, MDL has maintained a very low or zero debt profile. The investor presentation page 6 confirms zero debt.
What about cash flows and dividends?
For consolidated cash flow from operations for FY25 was robust at 2,078.05 crore rupees, though down from the previous years, which was exceptionally high due to changes in working capital. For standalone cash flow from operations for FY25 was also 2,078.05 crore rupees. Regarding dividends, the board has recommended a final dividend of 2.71 rupees per equity share of 5 rupees face value for FY24-25. This is in addition to the interim dividends already paid during the year. The investor presentation mentions a first interim dividend of 11.595 rupees per share adjusted for face value split and a second interim dividend of 3 rupees per share for FY25. So the total dividend for FY25, including this final proposed one, comes out to 17.305 rupees. That's a good payout for shareholders.
Now, usually we dive into segment performance, but I recall MDL has a specific situation here.
That's correct. As per Note 4 in their financial results, MDL is engaged in the production of defense equipment and is exempted from segment reporting under Ind AS 108 based on a government notification. So we don't have a segmental revenue or profit breakdown in these financials. Their entire operation is essentially considered as one primary segment.
Understood. So, summarizing the overall performance for FY25, what's the big picture and what could be driving these trends?
Overall, FY25 was a strong year for MDL. Both standalone and consolidated revenue saw significant year-over-year growth, and this translated into healthy growth in EBITDA, PBT, and PAT for the full year. The company achieved its highest ever yearly revenue from operations at 11,431.88 crore rupees and highest ever profit after tax at 2,324.88 crores on a standalone basis, as highlighted in their investor presentation. The weaker Q4 performance, especially on profitability quarter over quarter, might be due to the phasing of project completions, cost recognition, or specific operational factors in that quarter. Without more detailed management commentary on Q4 specifics, it's hard to pinpoint, but the full year strength is undeniable. Their robust order book, which stood at 32,260 crore rupees as of March 31st, 2025, provides good revenue visibility.
Are there any other significant notes from the financial report or major events from their investor presentation that investors should consider?
Yes, a few things. The financial report mentions the appointment of Sri Lalatendu Acharya as the company secretary and compliance officer effective June 1st, 2025. The associate company, Goa Shipyard Limited, in which MDL holds a 47.21% stake, is consolidated using the equity method, and its financials were audited by other auditors. The investor presentation is packed with significant events. MDL was conferred Navratna status, a major achievement. They celebrated their 250th anniversary and even unveiled a commemorative coin. There were several new orders and project milestones: export orders for multi-purpose hybrid-powered vessels, an MRO order for a helicopter from the Nepal Army, new contracts from ONGC for a wellhead platform and pipeline replacement project, and starting production of a multi-support cargo vessel for Navy Merchants, Denmark. Key defense project milestones include the historic tri-commissioning of INS Surat, INS Nilgiri, and INS Wagshir. They also delivered the 4th P-15B destroyer Surat, the 1st P-17A stealth frigate Nilgiri, and the 6th Scorpion submarine Wagshir. A significant contract worth 1,990 crore rupees was signed with MOD for air-independent propulsion plugs for submarines. They also launched Saur Shakti, a solar electric boat, and a 24 packs hydrogen fuel cell boat, showcasing their focus on green initiatives.
That's a lot of positive momentum. Now, a critical part, the auditor's report. What did C.R. Sagdev & Co. have to say about both the standalone and consolidated results?
This is good news. For both the standalone and consolidated audited financial results for the year ended March 31st, 2025, the auditors, C.R. Sagdev & Co., have issued an unmodified opinion. This means they believe the financial statements give a true and fair view in all material respects. There is an other matter paragraph in both reports, which is quite standard. It states that the financial results of the associate company, Goa Shipyard Limited, for the consolidated results were audited by other auditors, and their report was relied upon by MDL's auditors. It also mentions that the figures for the quarter ended March 31st, 2025 are the balancing figures between the audited figures for the full financial year and the published year-to-date unaudited figures up to the third quarter. Importantly, the auditors state that their opinion is not modified in respect of these matters. So, essentially, a clean audit report.
A clean audit report is always reassuring. So, based on all this, what's the outlook for MDL and what are the potential risks?
The outlook for MDL appears quite positive. They have a strong order book which provides good revenue visibility for the next few years. The Navratna status could provide greater operational and financial autonomy. The continued focus of the Indian government on Atmanirbhar Bharat, self-reliant India, in defense and modernizing the Indian Navy and Coast Guard should ensure a steady stream of orders. Their foray into green technology with solar and hydrogen boats and export orders also opens up new avenues. Potential risks include the inherent lumpiness of large defense contracts, dependence on government orders, execution risks associated with complex shipbuilding projects, and potential geopolitical factors affecting defense spending or international collaborations. Competition from other domestic and international shipyards also exists. As always, investors should do their own due diligence before making any investment decisions. This discussion is for informational purposes only and not investment advice.
Excellent. So, to wrap it up, Mazagon Dock Shipbuilders has delivered a strong performance for the full financial year FY25 with record revenues and profits, a healthy order book, and a clean audit report. The fourth quarter showed some sequential moderation in profitability, but the annual picture remains robust, supported by significant operational achievements and a positive outlook in the defense sector.
Precisely. The company seems well positioned to capitalize on future opportunities, especially with its upgraded Navratna status and a clear pipeline of projects. The significant dividend payout also reflects their strong financial health and commitment to shareholder returns.
Great analysis. Haha, thanks for breaking that all down for us.
My pleasure.
Haha, and that's all the time we have for today. Join us next time for more financial insights. Don't forget to like, share, and subscribe.